Hello and welcome to another update video about Solana. On the Solana chart, we're still in a fourth wave, sideways correction. That's still the idea. That fourth wave started here with this top in March. Don't want to talk too much about the bigger time frame, or the larger time frame. The idea is the fourth wave is still unfolding. It is possible that this is a triangle. I mean, that's the current thesis. So sideways correction, I've been highlighting already like last week, a couple of weeks ago, that this would likely lead to a little bit more sideways price action, which we can definitely see right now. And at the moment, this is still the case. And the potential is definitely there that we see here further, basically further sideways price action, over the, let's say, over the next few weeks or so, especially as long as the $119 level is holding. So the $119 level is the key invalidation point for this Elliott wave triangle, because any break below that $119 level will indicate that we are probably moving, you could say, in either a WXY pattern. So it would still be a fourth wave, but in a slightly different structure. Overall assumption would be the same, but it would be an overall different structure and allow for lower prices, and then probably with support in the region between $107 and $86, or even the larger white structure, which is even more bearish, which I'm not following primarily. Let's first see if $119 holds. As long as it's the case, we don't really need to focus on the other ones, but we should keep them in our back pocket. Important in a triangle is to understand that we're dealing with back-to-back price action, very messy structures. They can change frequently. So a few days ago, we identified a first 5-wave move up, and we had a corrective pullback. We had this support zone. The market reacted to it. I will leave it on the chart for now, because I cannot rule out that this pullback, tests, that there will be another pullback basically that tests that support zone again. So I would keep these still relevant, or would still see these as relevant. The levels 135, 132.27, 129.57, and 125.81. Okay, they remain relevant. There are a couple of ways how this structure could play out. So a triangle is an ABCDE pattern. We seem to be in the D wave. That's the current idea I have. The D wave basically indicates we go up a little higher, form a lower high in the triangle below 190, and should then see another higher low. That's an idea. And as long as those parameters that I described to you in these videos remain, basically are maintained and followed and respected by the price, there's no reason to expect something different. If we are really dealing with that D wave to the upside, I mean, it's a very fragile structure, but one structure that I could see here possibly is this A, B, C, and the C wave itself as an ending diagonal. Not a reliable structure. Not a reliable structure. To keep this scenario alive, the market should hold above the wave 2 high. No, sorry, it's the low here, the Monday low. So the market should hold above that Monday low at $134.20 pretty much. So this low needs to hold to maintain the upside pressure in the yellow ending diagonal in wave C of D. You could say, okay, maybe the nearest support is actually this B wave low. It's very much debatable where that B wave low is. Is it here? Is it here? Definitely not a reliable structure, and too many overlaps for anything reliable. We have a bit of a double bottom there. Well, it's not really a double bottom, but it's corrective. And therefore it doesn't matter which level I read out. It's basically very, very similar. So 138.80. So this is the nearest support. If you're watching for a level to focus on higher against, you can use that, but it's just not a reliable structure. Yeah, there's a high risk of it falling out. Okay, it looks even a little bit like a wedge pattern if we draw it here. So there's a high risk of it falling out of that pattern to the downside. Just corrective, okay? So I think the focus can be on higher, at least against that small B wave low here. $138, what was it, 80 pretty much, yeah? But it's just not the setup was down here anyway. I mean, the risk has now gone higher, because we're moving away from key support and because the structure isn't really following through impulsively. So be aware, where could it fail? Well, it could have topped already, okay, at the previous high. Then we would likely test the support zone again, maybe in a larger B wave, which presumably bottomed already on Monday. If we push higher, one key resistance level is $152. But in an ideal world, if this yellow wave count is being followed, I'd like to see at least the $161 level reached. That's all we can say about Solana at the moment. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.